Let's bring in Sadad Al-Husseini, founder at Husseini Energy and former executive vice president at Saudi Aramco, talk about oil a day after we did see that May contract go negative for the first time in its history. Sadad, thank you for the time. As always, good to talk to you.
Likewise. Thank you.
I just would love to start just getting your reaction to the move we saw yesterday. Is it something that you ever imagined happening in that short a time frame, especially?
Not really, but it's not surprising in hindsight because, frankly, the signs were all there that the demand had collapsed, particularly in the U.S. where the WTI finds its home. Refinery runs were down to 70%, 69% as of early April. The demand for gasoline was down from 9.5 to 5 million barrels from just a month ago. Jet fuel was down from 1.6 to 0.5. So everything demand-wise was down in the U.S., and I couldn't see how the April contract could have held out. There just wasn't any more demand for that oil, and they had to get rid of it. I guess the paper oil just had to be unloaded.
Right. So at this point, what are the chances that the current front month does the same?
Well, it is tough. The OPEC countries and OPEC Plus got together and made a very substantial cut on 9.7 million barrels. And they did note in discussions with the other producers, the U.S. and other G20, that there was going to be a need for a further cut from the non-OPEC Plus producers of about 6 or 7 million. And that has to happen quickly. So the burden now is on everybody's shoulders to take these additional cuts, and it's not happening fast enough in the U.S. So we may well find that June is not a very good month again, and I don't know whether it'll be a repeat of May, April, but we are looking at a tough next 2 months coming forward.
What does this historic price plunge mean for Saudi Arabia?
Look, Saudi Arabia sells globally. We sell a much smaller volume to the U.S., about 500,000 barrels a day average, typically. So we're very much linked to the Brent oil prices and the international prices outside the U.S. But, of course, it's one market globally, and when demand is down in the U.S. And the consumption is down by 6 or 7 million, that's just part of a global phenomena. The rest of the world is down also. We're talking about 25 million barrels loss of demand. So it's going to affect all the prices, but Saudi Arabia is more connected to the Brent than the WTI market.
The paper oil, futures contracts, derivatives and things like that needed to be sold, and maybe that's going to recur again with the June contract. If you look further out, toward the end of the year, where the forward contracts are trading, call it Brent, whatever you like, what has to happen in terms of the pace of economic comeback, when economies come back online, to even justify those prices on the demand side?
Well, when you look longer term, of course, we hope that the pandemic, the COVID-19, will be under control and countries will be getting out of the lockdown slowly. But when you start getting towards year end, you still have a buildup of inventories that's been going on now in the next couple of months probably. And you still have a lot of idle capacity that will have been sidelined due to these cutbacks that will be coming back into the market. So the combination of bringing back inventory and utilizing the idled capacity is bound to maintain a ceiling on oil prices. I would guess around the $40 mark for Brent, $40, $45. I wouldn't count on a very strong surge in prices just yet, but we still have to see what happens on the medical side and whether countries are able to get around the COVID or whether that will drag out further. That's really the main issue.
And to that point, we did see some headlines this week from Russia and Putin suggesting that on the medical front, the peak is still in front of them. We're sort of blind to a large degree of the impact on these prices on Russia. Can you speak to that?
Well, I think Russia is no different from all the other countries in the world. We're all facing the same challenge. Once the virus starts moving through a country, there's no stopping it other than drastic action. So everybody's in the same boat. Nobody has a silver bullet or a magic wand to correct this. We're all learning together, but definitely it's a tough situation, and we all feel for the various industries. I don't think anybody wants to see this go on any further than it absolutely has to. But from the energy point of view, you will need a lot of energy for a recovery once we get past this downtrend that we're in. And hopefully the U.S. industry will survive, will come back up. The marginal production in the U.S., unfortunately, will not be there. But that's the same story across the world. Marginal production across the world will be probably shut in for a while, at least through this 2020 cycle.